obviously last year was a rush. We saw a rush of activity within the active ETF market with dozens of new entrants coming into the space, huge asset gathering, and as you previously highlighted, also a rush of launches. Yeah. Where do you expect, or where's the UBS team anticipating these products to have the most traction among investors? And also, crucially, where does active IP work best within an ETF wrapper in your house's view?
So something really interesting in terms of my personal journey is that I haven't always been an ETF salesperson. So I started off on the sell side selling equity and multi-asset derivatives, and then the ETF was just a wrapper. And then kind of the hobby became bigger than the full-time job, basically. And it's really good to see that the ETF has become a wrapper again. You know, people are seeing the benefits of the wrapper, that so long as you have a good strategy, the ETF can be a great delivery mechanism for that. So I think, you know, clients generally, we've seen this move from active to passive in terms of overall industry assets, and clients will be just as discerning in terms of whether an active strategy has a high information ratio, is delivering alpha and so forth, whether it's in an ETF wrapper or not. So we have to be conscious that the ETF wrapper is not the silver bullet for distribution, right? You still need to have a good strategy inside. I would say that really strong managers, they have an opportunity for maybe broadening their distribution with the ETF wrapper. And I would say as well, for certain asset classes, it doesn't necessarily make sense to take an indexed approach. So to be very frank, there aren't meaningful enough benchmarks on the CLO side, for example. So that's perhaps one of the reasons why UBS, we've decided that our first active ETF should have been a CLO exposure, because also we have strong capabilities, but also the passive approach doesn't make sense. Similarly, for some thematics as well, perhaps it's also not making sense to just take an indexed approach. How do you slice and dice equities into certain thematic buckets, especially when there are different revenue source categories and so forth? I think corporate access can also help as well sometimes in terms of identifying winners within a space. And then I would say as well that it's about having the track record. So similar to the onboarding processes for mutual funds, where typically our fund buyers are looking for a 3-year track record before they even start looking at a fund, then they're also asking the same thing of ETFs as well. And so now that we're further along this journey in terms of active ETFs, there are far more funds in the marketplace that already meet this 3-year threshold. And so that means that then obviously there's less friction in terms of assets going into those funds. So that's great to see the live track records now. I would say that fixed income is still an area more broadly where, you know, ETFs have seen and continue to see the majority of assets going into the equity side. We still have these cynics, perhaps, and maybe rightly so, of fixed income. Does it make sense from an indexed perspective, right? So sometimes the indices become so esoteric. Do they actually have a meaning kind of in the bond buying space? We also have the situation where things like high yield, for example, is still an asset class where you can deliver alpha. There's still, you know, not so many benchmark hugging managers, for example. And so I think that's how we then think about new asset classes or new asset gathering levels.
Of course, a lot of the conversation in actives to date has been dominated by these enhanced strategies, predominantly focused on developed market equities or global equities. Mm-hmm. Is there an area for disruption or where further product development might be additive on the sort of enhanced side, or maybe especially within equities?
Yeah, I think the enhanced space, there's a right time, right place for these products. And, you know, we have seen that the performance isn't year on year, you know, always the same degree of strength. But that's okay. That's also part of the fund selector's job as well, to pick the right vehicle at the right time. I would say that EM equities is somewhere where we can think more about active strategies as well. So we have, you know, with MSCI emerging markets, for example, similar, let's not call it a problem, but situation to what we have in MSCI World now, where you have a large dominance of, you know, certain countries, and maybe then some elements of size, for example, could make sense. Also, again, the corporate access piece is really important when you're investing in EM equities, you know, from a traditional active perspective. And that's definitely where some managers can also potentially generate some juice as well for ETF buyers.
Thank you very much, Amanda.
Thank you.
And thank you very much for joining us for this edition of Investment Insights. Until next time, take care.